Hi, this is Daniel with Unrivaled Investing. Today we are going to talk about BigCommerce. Ticker is Big C. The question is this stock set for a monster rally or is it set to crash and burn? So why did BigCommerce get my interest? Primarily because it's a new IPO. The company is growing very quickly. The stock price is up over 50% in just a few days since it IPO'd. And also Shopify, which is a competitor, has been very successful. Before digging into what does BigCommerce do, if you're interested in videos on potential multi-baggers, companies that can go up hundreds or even thousands of percent over time, hit that subscribe button. Also, if you're interested in learning about what I'm maybe buying and selling in any given month, what do I own in my personal portfolio, go to unrivaledinvesting.com, click on that journey button. Also, if you have a question or you have a favorite stock you want me to look at, subscribe and like and leave a comment below and I'll happily respond to it. So what's the goal of this video? First, an introduction into the Big C, BigCommerce. What do they do? What's their market potential? Do they have an unrivaled value proposition? Thoughts on valuation, risk, reward. Do they have a 10x potential from here? That's the lens I like to look at every investment. Let's dig in. So what does BigCommerce do? They offer a SaaS platform to enable merchants to have a seamless e-commerce presence. What does that mean? So straight from their S1 filing, we provide a comprehensive platform for launching and scaling an e-commerce operation, including store design, catalog management, hosting, checkout, order management, reporting, and pre-integration into third-party services like payments, shipping, and accounting. So soup to nuts, they enable merchants to get an e-commerce presence, a seamless e-commerce presence. And you can see below in this chart that it covers a lot of different things from inventory, location, content, payments, shipping, tax. But do these services actually help their customers? And the answer is absolutely. For the merchant, for their end customers, these merchants, it's a critical service. It's enabling their e-commerce presence. In a prior life, I was an investment banker and I actually worked on Skullcandy or worked with Skullcandy. And Skullcandy is one of the merchants with BigCommerce, which is a lifestyle headphones brand and they switched in 2018, February 2018, to BigCommerce, and they migrated 9 of their international stores to the BigCommerce platform. The results from doing so resulted in lower operating costs, and the time to make merchandising and user experience changes on their site dropped by 2/3. So in other words, it was a simpler experience, it was a better experience, and it was a cheaper experience for the company and their e-commerce website. And not only that, it resulted in a 214% increase in revenue after launch and an 82% increase in conversion rate. So that's real money. When you're able to say, hey, we had a better e-commerce presence after launching on BigCommerce versus what we were doing, when we owned the experience soup to nuts, resulting in an 82% conversion rate, that's a big deal. That means more potential customers are clicking through because of the experience they had with BigCommerce. So, and broadly speaking, this results in a favorable net revenue retention, which is a metric that tracks if you have customers, let's say at the start of 2019, what's your growth rate into the years ahead? Do they stay on? And their net revenue retention in 2019 was about 106%. So if you had revenue in 2018, those same customers were doing 6% more revenue during that next year. So that means it's solid. Even factoring in churn or customers that leave, the net factor is you're growing and benefiting from that growth. It's not the best net revenue retention I've ever seen. There are SaaS companies with 150% net revenue retention, but 106% is still better than below 100. So how does BigCommerce make money? And the answer is that it's sort of two different buckets. The first is subscription solutions. That's the vast majority, where they offer a fixed monthly fee based on the underlying customer, how much business is going through the customer's website. So they have these 3 different tiers, and then they also have like enterprise tiers for much bigger customers. And you can see it's like from $30 to $300. That's generally small businesses. For much biggers, it's custom pricing. So that's about 3/4 of their revenue. The last quarter is partner and services, where they have a partner ecosystem for shipping, tax, accounting, ERP. ERP is enterprise resource planning, marketing, payments. So what is that? This, here straight from the S1, our customers benefit from the best of breed offerings of our partners, the flexibility to choose without penalty the best offer for their needs, and the tailored programs developed with our strategic technology partners. AKA there are companies outside of BigCommerce that have solutions that you can access. If you're a merchant in BigCommerce, you access their solutions. That those solutions might help you with tax, they might help you with accounting. That's what they're talking about. And they get a cut of their revenue. So the revenue that goes to these partners, they get a share of it. So, you could see the partner, they partner with these tech applications. It's generally one plus year contracts, and it's a revenue sharing relationship as well as some sort of integration. As you integrate some merchants, we get some of that revenue. So what's the market potential? This is a clear understanding. 75% subscriptions, a quarter is about rev share approximately in anything related to their partners. So what's the market potential? And the answer is it's huge. I don't really like this cut that they showed in the S1. It's a little blurry, but they're saying, look, e-commerce is this multi-trillion-dollar market that they are just tapping into. It's expected to grow materially in the years ahead. It could be like six trillion in a few years from now. So if they're just tapping into it, they're just a small company in a much bigger ocean. So there's plenty of room to growth. I never really like those stories because then it means there are plenty of competitors, but we'll get into that in a second. So they're tapping clearly into a huge market, but do they offer an unrivaled value proposition? And keep in mind, I always view any investment through the lens of unrivaled value proposition. The reason why that's so important is because if you offer a good or service that's unrivaled, it means you have the right to win. Unrivaled means you have a good or service that you simply can't get elsewhere, either on service or price. It's just an exceptional offering that you just can't get. Competitors can't compete. And when you're unrivaled, that means you're going to dominate your market. You're going to grow faster than your competitors long term because you're unrivaled. And that faster growth is going to result in better returns for the shareholders. So that's why I always focus back. Do you have an unrivaled value proposition, and dig in from there? And so do they have an unrivaled value proposition? Well, first, let's actually recap their value proposition to make sure it's crystal clear. So one, it's a relatively easy to set up, whether or not you're a small business to medium-sized to large business. For a small business, it only takes a few hours to get an e-commerce presence set up with all this critical functionality like inventory or taxes. Everything soup to nuts is covered in potentially up to a few hours, which is incredible how fast that is. It's lower cost. It's way lower cost than a piecemeal self-implementation of you trying to run your own servers, building all this stuff out yourself for e-commerce, and the cost is really low, only $30 a month. I mean, that is an incredible value proposition for a small business that's looking to get into e-commerce. It enables cross-channel commerce. So if you're a store on BigCommerce, you could sell into Amazon, you can sell into eBay, you could sell in omni-channel with something like Square where you're doing the point of sales. So this covers the full ecosystem. They also have this tech partner ecosystem, which we just talked about, 600 different tech partners that address a myriad of different needs for the end customers, for these merchants, whether or not it's taxes or ERP or accounting. And then lastly, performance and security, nearly 100% uptime, which means they've built the infrastructure so that the e-commerce presence is always going to work. So that way, all you have to do is leverage what they already built. You don't have to start from nothing and try to build something. You can leverage the platform they've already built for a very low cost of $30 a month. But is all of this unrivaled? That's the key question that filters out 95% plus of the investment universe out there. And the answer is no. They do not have a UVP. But why? Why don't they have? It's not unrivaled. Look at Shopify. If you look at the growth rates at Shopify, in 2019, Shopify subscription services revenue grew 38%, whereas BigCommerce total revenue grew 22%. For those interested, I believe this is probably a more apples to apples comparison if you want to dig into the individual companies, why. But Shopify total revenue over this period grew 47%. So, but I would focus on the subscription revenue component. But either way, like Shopify is growing nearly double the rate that BigCommerce is. Let's keep going. So Shopify subscription service revenue is also around 800 million annualized versus BigCommerce, which is annualized around 150 million. So Shopify is at least five times their size. And also, if you look at the number of customers, using Shopify versus BigCommerce. Shopify has over 1 million merchants. BigCommerce has 60,000. So, Mr. Big C, does size really matter? Also, why'd you choose the name Big C? Really? Yes, size does matter. First of all, it's because of platform economics. If you look at the app ecosystem, Shopify has 3,700 apps in their store. That's huge. BigCommerce only has 600. Why is that important? Because if you're a merchant, you're going to have greater variety for all these plugins versus BigCommerce. So you have a very particular tax need. Shopify more likely has that plugin than BigCommerce. The reason why it's also important is from a secondary aspect, which is you have feedback cycles. Who do you think these partners, let's say you have a partner that's both on Shopify and on BigCommerce. Who do you think that partner wants to refer business to? Generally, you're going to refer to the platform you're on. So all these apps that are just on Shopify, they're going to keep referring to Shopify. So it becomes like they become the growth engine, part of the growth engine for Shopify versus BigCommerce. Also, because Shopify is so much larger, it's easier for them to eat into the necessary investments that's required to scale and to grow. And if you look at the operating loss in 2019, Shop had a negative operating margin of about 9%, whereas BigCommerce had a 35% negative operating margin. So who can more easily stomach those losses? I see a couple of examples of distinct value proposition disadvantages for BigCommerce relative to Shopify. So let's take a step back. It's not unrivaled. They are going along with the favorable e-commerce trends. They are growing at a nice clip, half the rate of Shopify, but still a nice clip. But what about valuation? Do you still have this 10x potential? Shopify was an incredible investment. Do you still have incredible potential with BigCommerce? And the answer is not even close, dude. Like, BigCommerce already trades at 40 times the next 12 months sales. The reason why that's important and why did Shopify have this incredible run over the last few years? If you go back, Shopify's valuation has expanded dramatically. Like, Shopify's valuation only recently was around 40 times sales. If you go back to 2017, it was trading around 7 times forward sales. That's huge. That's a 6 times multiple expansion. That's huge. Any sort of growth, when you throw on that sort of multiple expansion, that's going to result in a tremendous return. But no one says that 40 times is going to be stable. What if it goes back to 7 times? But they just announced this amazing deal, BigCommerce, where they're going to work with Facebook and Instagram and checkout, and it's going to be incredible and juice their growth rates. Okay, then bake it into the assumptions. So here is a model I'm laying out: low, base, high, $104 stock price as of August 25th. And you could see ballpark, it's around $7 billion company, around 112 million in revenue last year. Let's assume a growth rate of 30 to 40%. Maybe I'm low. 30 to 40%. Let's assume optimized margins. Keep in mind, they're negative 35% operating margins recently. Let's assume positive 20 to 30%. Slap on a 25% tax rate, and you're getting somewhere between 20 and 35 million in optimized profit that they could do this year on a company that's $7 billion. That would be the equivalent of a 200 to 300 times earnings multiple. So let's assume, like, hey, you got a 5-year investment period. What's the growth rate? Well, growth rate of 20 to 35%, low to high. I think that's reasonable. Last year, they only grew like 22%. Are they really going to accelerate it that dramatically from last year? It's only going to get harder as you scale. You have the law of large numbers. So here it is, 20, you see that we're expecting in this sort of hypothetical potential scenario. Keep in mind, this is just hypotheticals. You can play around, and this is my value proposition to you, is that I'm going to drop this sheet below this video, and you can click on it and play around. You download the sheet, save it as your own file. You can change the assumptions you want. If you think, Daniel, you are way off on growth, you're way off on margins, plug it in. You pencil out what you think the risk reward can be. And keep in mind, I can be way off here on this. Maybe it goes way higher because, animal spirits take over. Maybe it goes way lower. because people get, petrified at some point in the future thinking like, whoa, will they actually ever hit these margins? But continuing on, I'm assuming 5 years of 20% growth or 5 years of 35% growth. That's the low high range. And then an earnings multiple 5 years out, 5 years out, that's 20 to 30 times earnings. Seems reasonable to me because it's a company that's at this point only growing 20, 30% a year. 5 years out might be growing a lot slower. That's a guess. So 20 to 30 times earnings, if you're a shareholder, your return is terrible in this scenario. Your upside is you lose 30%. Your downside in this scenario is you lose nearly 85% from here. This is a terrible risk reward. I mean, if I wanted to short individual stocks, I would consider BigCommerce. I personally prefer not to, just because why step on someone else's dream? But man, I mean, this is a terrible risk reward. But once again, my value proposition to you, you can go play around with the sheet yourself and figure out like, hey, I actually think this has way more upside. So this is not unrivaled, very rivaled, growing slower, and it's priced to perfection. Hard pass. Thank you very much. So if you're interested in what I actually am buying and selling in any given month, go to www.unrivaledinvesting.com, where I'm turning down the BigCommerces of the world, looking for the next incredible thing where the risk reward is much better, looking for the next 10x. So this is for the DIY investors that want their own inspiration, and this is just to track my own personal portfolio. You go to www.unrivaledinvesting.com, hit that journey button. And if you enjoyed this video, hit subscribe, hit like, and also feel free to leave a comment. If there's a stock that you want me to look into, make sure you subscribe, but put a note and I'll respond to you. Thanks so much.